Well, we're back with you on the Market Day Report. I want to take a quick glance at our opening prices here for you on the corn, soybeans, and wheat and cotton, and then I want to bring in some guest analysis along the way as well. Let's go to the corn board first and see what the markets are opening like. Let's go take a peek. These are live quotes direct from Chicago. And as we look at the big board here, on the corn, on the nearby December contract, right now we are trading 2.5 lower at 337 3/4. So we're kind of following through with the weakness that we saw overnight. Just one tick off of our low of the overnight and early morning trade. What about soybeans? Well, on soybeans on January, now we're down 6. We're trading at 980 on the day, and that is compared to a high of 989 3/4 overnight and a low of 975 1/4. Let's take a look at the wheat trade here. On the wheat, we have December Chicago wheat down a couple of pennies at 402 3/4. And that's just in the middle of the trading range, basically. March down 2 1/4. Kansas City wheat on December, we're trading about 5.5 lower. Last trade there, now 405. Now it's 5 1/4 lower. And on Minneapolis wheat, on the spring wheat trade today, we have December currently down 1 3/4 cents, and it's trading at 518 1/4 at the present time. Cotton market, we'll take a peek there. Here you have December down 15 points. Last trade now is 68.29 cents per pound. Let's go to the phones and welcome Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. Dewey, happy Monday to you. It looks like the markets are drifting lower here in the early going and overnight trade. What's behind that?
Well, I think there's a couple of things behind it. First of all, you can look and you can see that the dollar's 95 cents higher, so that's having a bearing. Also, too, palm oil prices in Malaysia took a bit of a spill here, which has put a little pressure on soybeans and also putting some pressure on the other markets, corn and wheat as well.
Early in the overnight hours, we heard that the U.S. dollar had gotten over 100 or par value, and when I came into work this morning, it was about 99.700, I believe. Now it's up at 100.030, so it's up 970 points on the morning. What happened to all that talk where they said the economy was going to collapse based on the election results?
Well, that seems to have subsided here for a while, but if you recall, for past few months, I have said that we would be looking at the dollar go up to about 103, 104 and a half, maybe 105, and we are in our last stretch, leg higher, and the dollar here, once we go up and meet the targets there, then I do look for a very sharp drop in the dollar.
Dewey, my hat is off to you. You did call this well ahead of time, and we're still not up to 103, but boy, the way it's going, it could get there quite rapidly. Let's take a look at the crude oil markets here too, Dewey. The crude oil market has been really sliding here lately. December, West Texas Intermediate crude now priced at $42.86 per barrel. That's down 55 cents per barrel right now. Some analysts a long time ago thought they would get down toward $40. Then Russia started getting involved. OPEC started having meetings. It went up over $50 for a little while, and now it's backing off. Do you think 40 is still a realistic goal on the downside?
Yeah, I think that it is. I mean, we just cannot quite seem to get into agreement with the members of OPEC here about their production and so forth. So, I mean, we got some uncertainty regarding that. So, yeah, I think the crude could get down to the 40-cent mark.
All right, let's take a peek at the heating oil because this also is making new lows here. If I understand correctly, this morning, December heating oil, which is how they trade diesel fuel, currently down 0.8 cents, and we're under 140 at $139.3 per gallon. We'll be back talking more with Dewey Strickler about the markets, this time the livestock trade, when we come back next. Back with you on the Market Day Report. I'm Marlon Bowling with you. We're talking right now with our very special guest, Dewey Strickler. Now, Dewey is with AgWatch Market Advisors. He is based in Franklin, Kentucky. And Dewey, looking at the livestock side here, we saw a very active cash cattle market develop, but it was after the markets all closed up on Friday. They played it as late as they could play it on Friday. And it seems like the market actually held about steady with the week before, even though some earlier indications during the day on Friday were clear down at 101 per hundredweight on cash cattle. They ended up more closer to 105 per hundredweight. And some analysts thought that was kind of an optimistic thing to happen, and others were kind of disappointed in that. I wanted to get your take on how we finished there.
Well, I think first of all, you had your weights were up a couple of pounds, and the box beef was down here a little bit last week. But I mean, if you go back and look at a chart on like your December cattle, we've been up here for about 5 days. We've gotten just a little bit above the previous highs here, and we're due for a break in the cattle, probably as much as about $2.
Is that right? Okay. How do you feel about that feeder cattle trade then?
On the feeder cattle, pretty much you're looking at about the same situation here. We've gotten the market above its previous resistance here, and you've been up about 5 days as well, so don't be surprised if you see the January feeders drop back to about 120 or a little bit lower here.
Oh, okay. Well, let's take a look at our current prices here, Dewey. We'll walk through these, and these are live quotes direct from Chicago. So we'll begin with our feeder cattle trade here that you were just talking about. Currently, we have the November 38 higher at 126.10, but we were talking about that earlier. We're going to have our last trading day coming up very soon here. The January contract is now $1.40 higher. We're at 122.42 per hundredweight. So we're definitely closer to the high than we are the low in the opening range. March feeders now up $1.07 in value, and they are priced at $118.52 per hundredweight. So an optimistic view on the feeder cattle trade as we get rolling here on a Monday, everything over $1 higher with the exception of that nearby November contract. I want to back up and look at this live cattle trade. Here on the fat cattle, here we have December now 20 higher, last trade 105.80, and we have the February contract 12 higher at 106.42. Meanwhile, April is at 106.22 per hundredweight, so it's 12 cents higher. Very quiet trading activity here on the live cattle futures so far today, so it seems like the traders there are unenthused, I guess, to say the least, Dewey.
Yeah, that's exactly right. You know, you'll see the trade pick up a little more interest in the market here beginning tomorrow and definitely by Wednesday.
All right, let's take a look at the lean hog trade and on the lean hog futures as we switch over there on the big board. December now 82 lower, Dewey, at 46.30, and we have February down $1 at 53.35. What kind of action do you expect to see in the lean hogs? Can they snap out of this little knee-jerk reaction on the open here?
Well, I think, you know, the market is going to trade back and forth here a little bit. I wouldn't be surprised we'd get a little bit of break back to about the 45-cent level, maybe 44.5 or even 44.
You think that'll hold?
I think it will.
You do? Okay. So I wanted to get your opinion on the trader's point of view. Sometimes, you know, these large commodity funds like to come in and roll these positions out from time to time. Where are we right now in December lean hogs? Have they started rolling out of that now?
Yeah, they've started rolling out of that. You know, you got to look and remember that the bulk of the volume that we're looking at in the meats anymore now is done by your large professional traders, your funds, and so forth. So when you look at some of the fundamental issues like basis factors and so forth, they're not as relevant as they used to be.
So do you think more volume is starting to show up now in February?
I think we will see more volume here this week beginning the February contract.
Very good. Okay. Well, Dewey, I appreciate all the comments on the markets as we get things rolling on a brand new trading week. Wish you all the best for the coming week there, sir.
All right, thank you very much.
Dewey Strickler, AgWatch Market Advisors in Franklin, Kentucky. So there you have it, Janet. Hogs having a little trouble getting out of the starting gate here. Cattle doing okay.
And interesting to see the 28% decline over the last 6 months on that as well.
Yeah, that's why we like to show them. Big moves.
Big moves, and keep an eye on the hog markets for sure.